Ag lending is an essential part to starting one's agricultural pursuit. Tim Farris, Director of Rural Markets at People's Bank in Lubbock, Texas, thinks it is important to understand the lending process. He shares a few facts and advice for young people wanting to get started in the agricultural industry on the South Plains.
I'm glad to see young people involved in agriculture in any way.
Tim says the institution's uses of and reliance on collateral as a means of approving loans has changed throughout the years.
There is some collateral lending, but a lot of collateral lending has changed over the years to where, yes, collateral is very important, but even more important is cash flow. Can they generate the income to make all their debt service payments? That's one of the bigger factors now. Instead of collateral is very important. You've got to have collateral to back up the loan. Ag commodities make up about 40% of our local economy. I've heard it up to as high as 50%. Agriculture drives this region. Even from here north, a lot of it is dependent on weather, of course, and irrigation water. But agriculture drives our economy.
With agriculture being such a large portion of the bank's standing loans, we asked to clarify the differences between farm loans and mortgages or car loans.
In ag lending, you have several different things. You have, if you're buying farmland, it's on anywhere from a 10 to 30-year loan that you pay annually on. Production loans are typically paid off every year when you sell the cotton, corn, whatever you're farming. When you sell your crops, you pay off your loan. Equipment loans are usually set up on a 5 to 7 year payout where you make your annual payment. You try to structure those payments where they have income coming in from either sale of crops or cattle to make those payments. Farm loans are usually a line of credit. They come to you for all kinds of credit. It's very capital intensive.
The capital Tim talks about includes tractors, implements, harvesting, and even livestock, the base models of which can exceed $300,000. That number doesn't include maintenance expenses or fuel or feed or fertilizer. Those costs lead us to one of the biggest concerns shared by many agriculturalists.
In all areas of agriculture, that young people aren't coming back as much as they were in the past, and a lot of it's because of the risk. It takes so much capital to get started. Unless you have a very strong family in farming, you don't have that background or that help that you need. It's very discouraging. We need more young people coming back. I hope to see it, but it's very discouraging to see the average age of the American farmer probably in the 60s, and then it's just we don't see a lot of young people coming back, which is scary for the future of ag.
And here is his idea of a solution.
I think one thing, we need to educate people. We're the minority in rural America. I mean, the cities, that's where all the population is. We need to educate them on agriculture.
The spreading of misinformation has always taken away the prestige that once came with being a farmer in the United States. Today, fewer than 2% of the U.S. population are agricultural producers, and they make up almost half of the standing loans of People's Bank and many other rural banks across the South Plains, West Texas, and rural America.